Hello and welcome, and thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwagu. On the show today, Bank of America sees Africa as land of opportunity in post-trade deal world. The International Energy Agency asks African countries to quadruple their rate of investment in the power sectors for the next 2 decades. And power cuts hit South Africa again. Let's get the show started now with the markets. And the markets in South Africa were heavily beaten at intraday after a nationwide electricity blackout overnight by ailing state utility Eskom spooked investors and reignited worries about the economy. Power firm Eskom implemented stage 2 power cuts, shaving off 2,000 megawatts from the national grid. The firm said it had lost 3 generation units, pushing its emergency reserve capacity to critical levels. The JSE index was down 1.06% at intraday. Here in Nigeria, the market overall index was trading high at 0.15% at intraday. Meanwhile, the market in Egypt is closed on Friday but traded up 0.59% on Thursday. The Nairobi Stock Exchange index closed positive on Thursday as well. And Gulf markets closed for the week on Thursday, with banking shares and corporate earnings making the Saudi index the biggest gainer by 0.63%. Industries Qatar was the main drag on the Qatari index, which edged down 0.11%, but gains in other blue chips capped losses. In the United Arab Emirates, Dubai's index reversed course to close up 0.40%, with blue chip developer Emma Properties and Emirates MBD rising 1% and 0.4% each. The Abu Dhabi index slipped 0.25%, with the country's largest lender, First Abu Dhabi Bank, losing 0.4% and Emirates Telecommunications down 0.5%. The European markets were slightly lower on Friday morning as investors reacted to conflicting signals about the ongoing Sino-US trade war. And a number of data were also on the market street. Let's begin with German export data as Chelsea joins me now from the Frankfurt Stock Exchange. Hello, Chelsea. Well, German exports rose 1.5% in September, increasing more strongly than had been expected. So what are the growth drivers for these export figures?
There were a couple of things that really stood out in this report. One of them was German exports to non-EU countries. So German exports to the UK were up a lot, which had been in the past several months hurt by the Brexit negotiations. So we saw some relief there. German exports to the US also rose about 7% year over year, which is a pretty significant rise. And those exports had also been dragged down by the US-China trade war and trade tensions. They did see a decline in exports to China, but it was more than offset by the rise in UK-US exports. In terms of where the growth was coming on a sector level, there was a pretty large increase in auto and vehicle exports globally, and that sector has also been really dragged down by these trade tensions and global economic worries. So there was a pretty big relief among investors that the industrial sector in particular seems to be picking up. At the same time, it's 1 month of data. And a lot of the data that we've seen out of Germany has been quite mixed, including industrial data we saw earlier this week for production and orders. So it's not clear yet if this is really the turning point for the German economy.
All right, the Wall Street Journal reports that the Justice Department has issued subpoenas to 4 automakers, including Germany's BMW and Volkswagen, as part of an antitrust investigation into an emissions deal with the state of California. How big of a risk is this to the auto companies?
At this point, the Justice Department investigation is still in a very early stage. These subpoenas don't require the companies to submit documents at this point. So it's really just in the beginning stages of what could become a larger antitrust investigation. But what investors are saying is that this is a huge, it creates a lot of uncertainty for these companies, because at the heart of this investigation is U.S. emission standards. And in the U.S., emission standards were supposed to be really tightening up over the next several years, but the Trump administration has tried to roll those emission standards back. And the deal that these companies had struck was with the state of California to sort of hold themselves to a higher emission standards than the Trump administration wants them to. So the potential risk here is that these companies will end up having two different emission standards, one with the state of California and one with the broader U.S. And I think just because of the way that companies plan for the future, this could create a lot of uncertainty into their supply chain, and they don't really know at this point what sort of emission standards they should be trying to build cars to meet for the next several years. So there's definitely a huge uncertainty angle for investors here.
All right, still on antitrust issue, EU Competition Commissioner Margrethe Vestager has Google parent Alphabet back in her sight. Well, Vestager said at a conference on Thursday that Google's proposal to appease antitrust concerns about its shopping service isn't working. Could more antitrust problems be ahead for Google?
I don't think the EU ever really took Google out of their line of sight. They've handed down two pretty large fines to Google over the past several years. One of them was for favoring their own shopping comparison site over competitors, and another was for favoring their Android operating system against competitors as well. So they've been fined and they've been asked to propose solutions to those complaints from the EU. And what Margrethe Vestager is saying is that she doesn't believe Google is doing a good enough job there. So one potential action that the EU could take is to open a non-compliance case, and that could lead to more fines or to different restrictions on their business going forward. They also are at the same time facing EU scrutiny over their recent decision to buy Fitbit, which is the smartwatch company. So I think the EU is going to continue to sort of ramp up their oversight of not just Google, but all of the large U.S. tech companies.
All right, Chelsea, it's been a wonderful week with you. Thank you for your time and enjoy the rest of the weekend.